It's no surprise that ICT is well known for his ability to call the markets, for not only him being able to predict where it's going to go, but when it's going to get there to the tick. But the question remains, how does ICT do that? In this video, I will uncover all the gems that I've learned from ICT on forecasting. Before we get into the video, make sure you guys are following me on Instagram. If you guys have not already, this is where you can find me. The first thing we want to pay attention to is the economic calendar. This is essentially your roadmap for the week ahead and when to expect volatility to enter the marketplace. When looking at the economic calendar, we want to focus on the high impact news for that week, as those are the days where we are going to expect the most volatility and the most volume to come into the marketplace for our overall direction, either a manipulation or distribution phase. I'll talk about that later. So Wednesday here we have consumer confidence. Thursday here we have final GDP, and then Friday here we have core PCE price index, meaning that if we are expecting a move to translate into the markets this week, Wednesday, Thursday, and Friday is our best bet for that move. And for the days that does not have any red folder or orange folder news like Monday, I typically want to avoid. When forecasting, most of our analysis do come from the higher time frame, whether you're looking at the monthly, the weekly, or the daily. Coming into the weekly time frame, our main focus is the drawn liquidity. Essentially, where has price come from and where do we anticipate price to head towards next? So some key things I took note of here is this buy side liquidity here as my drawn liquidity for the weekly, as well as we did take out this liquidity pool right here. So these are two key things I want to keep note of when looking at the ES coming into the week. Coming down to a daily here, it's important that we understand how does a weekly candlestick form from a daily perspective. We have two candlesticks here, a weekly buy candlestick and a weekly sell candlestick. If you guys remember from my AMD video, accumulation, manipulation, distribution, this applies to the weekly time frame as well. Remember when I told you guys news is our roadmap for the week ahead? This is essentially what I mean. So Monday we didn't have any news, so Monday would be our accumulation day. Essentially, price can have some sort of movement, but it's not the movement we're anticipating with volatility, so most likely we are going to skip out Monday. Next thing to know during a bye week is 70% of the time Tuesday or Wednesday create the low of the week. So coming down here, we create this bottom wick, either Tuesday or Wednesday, we create that bottom wick. And it's important to know that Thursdays more often than not are reversal days. So we could see a reversal from here and then the pullback for a continuation on Friday. And then Friday ends the candlestick like that, and this would be your buy week. And then the opposite can be said for a sell week. So Monday would be the accumulation week from the open. And then the high of the week would be created either that Tuesday or that Wednesday. If we seen that high of the week created on a Tuesday and then we reverse, we would see that continuation like so on a Wednesday. But if the high of the week was created on a Wednesday, then this would be your continuation on a Thursday. And then we have that continuation move lower on a Friday, and then back to the closing. This would be your bullish week, and this would be your bearish week. And for some deeper explanation, as you can see, Monday we had that accumulation. As you can see, price just staying inside this range. And then Tuesday we create this high of the week. After we create that high of the week on the Tuesday, we seen that reversal on that Tuesday. Wednesday we seen the continuation lower. Thursday we seen a slight pullback, but we seen overall continuation lower. And then Friday we closed the week off, ending in a sell week, as you can see. After understanding a buy week and a sell week, now it's time to actually create some type of plan. So the key things that we want to take note of is Mondays are typically accumulation days. Tuesday or Wednesday will either create the high or low of the week most of the time. Thursdays tend to be reversal days or the continuation of the prior day. And Fridays, either the continuation move if we have not met or drawn liquidity, or come back to the weekly range. So here's what I would mean. So we would expect something like Monday to maybe give a slight push lower, since we don't have any news on Monday. Then we may see that continuation lower here into an inefficiency. Right here we have a bullish fair value gap as an area of support. You always want to take note of your areas of support or resistance on the pair that you're trading. So Tuesday we come lower, tap into this level of support, and then we create a low on Tuesday, and then we reverse higher. Then Wednesday, if we create a low on Tuesday and give an overall rejection from this support level, on Wednesday we will see that continuation move from Tuesday. So Wednesday we could get a move like this, and then Thursday we would see that continuation move higher into our drawn liquidity, which is this buy side liquidity, which is our drawn liquidity. Now coming into Friday, we've already met our drawn liquidity, so most likely what Friday is going to do now is come back into that weekly range, so we may see a down movement like so on a Friday. Just like I mentioned from a bye week, this is what we would typically expect. Monday to accumulate, Tuesday or Wednesday, we come down into this bullish fair value gap, and then we see that break of structure from that area, and then the next day we would see that continuation higher like so, and then coming into the next day we would finally see our target met, and after our target is met we would come back into that weekly range. Here are some overall notes when forecasting. Monday, since we didn't have any news on Monday, that will most likely be our accumulation day. High or low of the week, 70% of the time will either be on a Tuesday or a Wednesday. If high is met on Tuesday and reverses, Wednesday will continue whatever Tuesday happened. And if Wednesday we created the high and reversed on Wednesday, then Thursday will see that continuation. Thursdays are most likely to reverse, meaning if Tuesday we created the high and then we dropped and reversed on Tuesday, then we seen that continuation on Wednesday, then Thursday would most likely be that reversal higher. Friday, if the draw has not met, price will continue higher. Our drawn liquidity is this buy side liquidity. If Wednesday we came lower, created that low, and then reversed, and then Thursday we seen that continuation but has not taken out that buy side, then most likely we would expect a continuation move on Friday. But if that drawn liquidity has been met by that Friday, most likely price will come back into the weekly range, so we could expect some type of slight pullback on a Friday, kind of like your TGIFs. When you are making a plan for forecasting, it's important to have correlated pairs aligned with your confluence, meaning that if we are expecting higher prices on the ES this week, we should be expecting lower prices on the dollar this week as well. So the same context applies. Monday we don't have any news, so we would expect a accumulation day. Tuesday or Wednesday we come higher into this bearish fair value gap, creating a high of the week. And then after creating that high of the week, the next day we would see that continuation lower like so. And then Friday, our target is met. We come back into the weekly range, which our target being this sell side liquidity pool. So this is our overall sell week for the dollar in correlation with the ES going higher. We not only want to look at the dollar, but also other correlated markets with the S&P, which is the NASDAQ and the Dow Jones. As you can see, the S&P did not take out this high right here, but the NASDAQ did, and the Dow Jones did. Our narrative expecting at the opening or early on into the week, bearishness to enter the market, tap into this bullish fair value gap, and then see that continuation. This helps support our bias. So for this week, we had red folder news for the later parts of the week, which was that Thursday, Wednesday, and Friday. So most likely Monday or Tuesday will be some type of accumulation and some manipulation, and then when we come into Wednesday, Thursday, and Friday, that's when we can expect the volatility to come into the marketplace to then set up for a distribution phase. So that's how we overall use news as our roadmap, but also giving us an idea of when we should be in the markets and taking full advantage, or when we should be either sidelined or be patient. So we went over how a weekly candlestick is formed, which was your buy weeks and your sell weeks, like I mentioned. Monday we had that accumulation. Tuesday or Wednesday we created that low. Then after creating that low, we see that reversal. The next day we see that continuation into our drawn liquidity. Then after meeting our drawn liquidity, we come back into the weekly range, which creates our buy week. And the opposite could be said for our sell week. 3 is framing a plan. This means marking out your liquidity areas, marking out your zones, marking out your inefficiencies that you see in price action. So we have this fair value gap as well as we have this buy side liquidity. So with these two, we can frame a plan. If we know Tuesday or Wednesday creates the low of the week 70% of times, then we can anticipate that Monday would accumulate, Tuesday or Wednesday create that low of the week, tapping into the bullish fair value gap, and then after tapping into that bullish fair value gap and we see support and then price reverses, we can anticipate the next day to see that continuation, all until we get into our final target, which is its buy side liquidity, to then we see that drop off on that Friday. So this is framing a plan, this is framing a bias, what to expect for the week for Monday, Tuesday, Wednesday, Thursday, and Friday, as well as using news for your guide. 4th is intermarket analysis. This is using other markets that are closely correlated to yours. So since the dollar is inversely correlated to the S&P 500, since we are bullish for this week, anticipating a buy week, we would anticipate the dollar having a sell week. And using other correlated markets like the NASDAQ and the Dow Jones, we want to see the same thing happen with those markets as well, to see them coming higher with the S&P 500. Final message here is a forecast is simply a plan, something to come into the market with. It's not a if all be all. You're not always going to be correct. There's going to be some weeks where you may not even know where price is going to go and you just have to, wing it. But it's overall a plan, what you expect to come into the marketplace, and overall prepare yourself before the market begins. That's it for the video, guys. I hope you guys like, subscribe, and leave a comment on what I should talk about next. I'm Arkham.